Well, hello everybody and welcome to the show. Talk about a big, powerful day. And it's crazy because just last night, everybody online was talking about how pessimistic they were and how crazy things were going on in the fixed income space, where the 10-year yield very quickly, rapidly reached up to 4.5%, and TLT was absolutely cratering in the overnight session. On today's Stock Market Brief show, we're going to dive into today's move because we've seen this stuff take place before. So I want to chill the FOMO, look for what we can do if a bottom has been placed in, but ultimately be aware of the last times we've seen big moves like this and what occurred shortly after. These episodes are brought to you in partnership with Interactive Brokers. Make sure to check the link just below in the pinned comment. If you don't have an account with them, make sure you still check it out. Check out their campus. They have a whole host of free tools, resources. I do a lot of trading on Interactive Brokers. I use a bunch of different accounts, but Interactive Brokers is one of them. They have courses from beginning to advanced, and then a big thanks to my Patreon community. If you want to join that, take a look. If you don't like it, well, you're out $9. But if you do like it, well, we got a whole host of benefits for that $9, including Tradie Ticks. Has all their Discord bots in there, including the query channel where you can type in various commands. And you can get some cool data and some cool charts to do some research. Let's get into today's show. All right, people, welcome back to the show. The 11 sectors that make up the S&P 500, like, oh my gosh. Holy cow, that's some big moves, right? Just so happens this is what you call a face-ripping rally. And I know people hate when I comment about face-ripping rallies. Please don't say it anymore. But the reality of a face-ripping rally is what we talked about in just a few days ago, right? We were trying to prepare. We showed this chart. And what we did was we applied a one-day rate of change. And what we said, simply put, was when you get a big move to the downside or a big move to the upside, it's very likely to have them clustered around each other. So boom, what do you notice when we flip over? We had a big down day, minus 6%, and this was an outsized move. Now notice, this move was almost 10% on the trading session. Yes, you heard me correctly, almost 10%. That's 9.52% in the SPX on a single day. When's the last time that happened? Well, it was 2008, the great financial crisis. Pandemic almost got there. So let's zoom into those charts and what occurred shortly thereafter. We'll take a look here at the pandemic. I know it doesn't look crazy on this screen because we're so used to these big moves, but we did have a rapid rate of change down here, as you can see, roughly about 9% or so. And you can see we closed at the lows, massive panic. And then bam, we shot up significantly higher. And what shortly there happened? Well, we ended up resolving a little bit lower before finding ourselves a bottom. What happened in 2008? Well, in 2008, we saw a pretty big decline in just a short period of time. And bam, we closed at the highs to have a massive rally above 10% on a single trading session. What there shortly happened after? We started to go higher and we started to sell off, putting in a lower low once again, and then seeing another big rate of change to eventually finding the bottom of the great financial crisis. Take a look at the chart today of the SPY on the daily time frame. That is one heck of a candle. But as you see, we're basically retracing about, I would have to guess, maybe around 50% of this previous decline right here. We're still below the all-time high anchored VWAP, and we're still below that year-to-date VWAP. So is the best idea to chase into this move, or is it to consolidate? Well, we'll know the absolute answer in hindsight, but for me, I don't personally like to chase these type of moves. I'll show you what I did intraday to give you some aspects because I've been telling you what it is that I'm looking for specifically and what I've been doing. But let me just say one thing about this candle. I'm going to call it the one big, beautiful green candle. Some people are calling it the greenest candle ever. Fake news, though, it's calling it something else. But what do they know? My candles are the greenest candles, and they all know it, but they don't want to admit it. I love big green candles. Oh, I just love them. Huge green candles. The weekly chart here, where did we snap back to? Once we get extended, it's likely to see these rubber band snapbacks. We snap back into a weekly 5 EMA, and we knew that things were coming because things were getting very oversold. Just go watch the last couple of videos, and we're talking about shorter term signals that were getting oversold. Okay, that's just what happens in these markets. So what did I do intraday? Well, I was looking at various charts, And I got lucky, right? I didn't know nothing like this was going to happen, despite the fact that basically Trump came out intraday and said, hey, it's a great time to buy it. I had no idea what was actually going to happen. But what I look for is what I look for on larger time charts too. I look for periods of contraction. So SOXL is in the semiconductor space, right? It got on my radar right out of the gate early on there because there was some news around NVIDIA and we saw a little bit of a spike in volume. So it got on my radar. And what I noticed here was simple, right? The market was holding up rather well. We saw these higher lows building up into this very tight period of price action. And so I took a little bit of a trade. Remember, I've always said this, and I continue to say it, in higher times of volatility, including if you're looking at leverage products like this, you don't need large positions to do good. Well, what happened? Holy cow. This was where I entered down here, and this thing shot off like a rocket ship based off of that news. In fact, here's the trade here, up 42%. That is not normal behavior. So what do I do in a situation like this if I take a little position and it goes up this big? I sell into it. I keep a little bit on, but I mainly sell my position into it, and I look to reestablish other core positions if the market is actually trying to find itself a bottom. But that's not it. Small caps were also getting hammered. You could see a low to another low, but yet the RSI was pulling in a bullish divergence, and I got lucky there too. In fact, I did trade this. We saw the big pop up to where? A declining 5-day moving average. So what do? I once again, I sell into it. I don't try to get the FOMO and do all of this stuff. I just slowly try to wait for the right setup where you have a decent risk to reward. And if I get lucky, like I did today, because that is pure luck, I didn't know this was going to happen. I just sell into it and treat it like normal. I didn't trade IWM. I traded TNA. There's a screenshot up 30%. Now, this is coming off of obviously crazy market volatility. So these are the type of things that I've been trying to prepare people for. So I hope at minimum you've been protecting yourself to the downside. And if you saw little opportunities here and there, awesome. Now I want to just focus in that if you missed the move or if your portfolio did good today, just be aware of the current structure and what's happened in the past after these large moves. And we'll talk more about expected moves here shortly. Now, this move came also with positive market net flow basically throughout the day. It was rather flat, but as you can see, the green line was above the red line, and that's more of a positive note for the market. And you could see the SPY price action basically was coiling up all day long. And then eventually we had a catalyst to move that contractionary period into an expansionary period. And everybody, well, was shocked. As you can see, Davey Traders back at it again, celebrating these wins. These just comical entertainment there. If we take a look at where we stand with the flip line, we're still underneath the gamma flip line, which means what? It means up moves can perpetuate stronger up moves. It means down moves can perpetuate stronger down moves. It means volatility, right, is rather elevated. And you could see that here in the price action. As far as the direction of the 5-day moving average goes, guess what? We're yellow across the board because of today's move. Surprise, surprise. But what does yellow mean? It means that we're above a moving average in this case, but it's still declining. So what happens here? Well, maybe we get a push up higher. Maybe this starts to flatten out. Maybe we start to consolidate and pull back. Maybe we flag out. Maybe this turns around, and then we could start to see about stronger moves, maybe up to these blue lines, which happens to be the year-to-date anchored volume weighted average price. From an expected move standpoint, we've tagged, right, every expected move this week except for one. And today we got to the upper one and, well, blew through that. Now, when we blow through these, right, it's very common to doodle around this. Now, I'm not calling, when we close at the highs, there's typically, just like if we close at the lows like we did over here, it's common to see some follow through. I don't know what's going to happen based off of this news around the 90-day pause and China's not invited to this party and just how important they actually are and narrative over narrative and some more narratives, right? But what I do know this, throughout history, what I've seen on these expected moves, it's common to doodle around them. So we'll see if we really break through this or if we just kind of go further and then kind of come back in and do that consolidation. So yeah, we've tagged now, it was a 13 out of 14 weeks over here, and we've expanded through some of them. So as it stands right now, just some pretty wild moves. We got outside the quarter to date. Well, we're back within it to being almost flat on the quarter, actually, right? We closed the quarter right over here at about 555, and we're not too far off of that. As far as the month to date, we're almost unchanged. Once again, from a month to date perspective there too as well, and we're down about 6%, 6 to 7% year to date based off of just this one crazy move in the market. Now let's take a look a little bit more intricate for my intraday traders. And people that are looking maybe to not jump into the FOMO, or maybe looking for areas of risk to sell into if you didn't get any off the table or chips off the table. So here's the tea. There's a lot of stuff going on this chart, so I'm going to walk you kind of through it all. So first and foremost, we have a green line and a red line down here. All that is showing me is the all-time high VWAP, so ATH, all-time high VWAP, and this is the yearly low VWAP. And the reason why I'm showing this here is because if we can hold the yearly low, but we remain below the all-time high VWAP, let's see how price doodles in this area to see if it compresses over time and then potentially sets up for a larger move. That could be a possibility to watch for, as we've been rejected from the all-time high VWAP before. Now, after a strong move like this, if we continue through that, right, I don't like entering and FOMOing into a very strong move. Once again, I like to see consolidations. So I got lucky today on some moves. I sell into it. Now I wait for the market to give me another entry that has a good risk to reward. And when things really start to change dynamically, meaning that my market conditions get better where I can hold into positive gamma, when the 5-day moving average starts to turn back around, I can start to execute into more swing trading based positions. But in the meantime, if a day trade shows up, I can take the trade, sell into it a bit, and maybe turn that smaller portion into a swing trade itself. Now, as far as tomorrow's expected moves go, actually, I'm going to just do it again. I'm going to go ahead, because I do this for my Discord community. I'm going to go ahead and share with you tomorrow's daily expected moves, because it has been volatile. But if you want to join the Patreon community to support me out, make sure to do that. You sign up through Patreon, you sync your Discord up, and good to go. These are the expected moves going into tomorrow that have been already shared with them. I share them on a daily basis. S&P 500, SPX is $133 expected move. You got your upper level, lower level. Today we hit a 2 sigma level. I include the 2 sigma levels here too as well. And then the SPY has a $13 expected move, which is still, people, gigantic. Okay, it was $18 or something yesterday. It's still $13. Gigantic. I mean, I'll be honest with you. I'm used to trading like $3 to $4 expected moves, and we're seeing $13 expected moves. Like, this isn't normal by any means. So don't be surprised if we're down $13 tomorrow. Don't be surprised if we're up $13 tomorrow. Okay. So let's take a look back over here. There's a couple other lines on my screen. What's this white line? That's the year to date VWAP. Okay, which can be a level of interest up here if price were to come up into those ranges. And then we have this light gray VWAP down here. And this light gray, which is hard to see, is the quarter to date volume weighted average price, which basically is the month to date price. And I put that on there other than the tariff one, right? Because it actually is kind of in the same area. So I just decided to go quarter to date. It held as resistance once we broke down, but today we broke through it. So for whatever reason, if we come back in and people get scared from a move from up here to down here, which is a big move, it's $20 on the SPY, right? It's a huge move. I would just be waiting to see how it consolidates and then eventually trying to find a new risk to reward entry. That's all I really have with you for you on today's episode. I do want to really quickly say that the levels themselves are accurate, but the closing price here looks a little off to me. It says 543.40 on my TrendSpider app, but if I do look at something like the stock charts over here, you can see the last closing price was 548.62. So I'm not 100% sure what that discrepancy is, but the price action and everything and the levels that are on the screen still remain the same. That's all I got for you. Hope it helps out, and I'll see you later.